It's the question that could shake the very foundation of the U.S. economy. What happens when China, yes, China, decides to dump U.S. debt? We're talking about trillions of dollars. The largest foreign holder of U.S. Treasury bonds, turning its back on America's financial system. What would that mean for you, for your savings, your job, and the future of your family? Buckle up, because what you're about to hear is more dangerous than any financial crisis we've seen in decades. Right now, as you watch this, China is holding more than $1 trillion worth of U.S. Treasury bonds. That's not just a number. That's the financial lifeblood of the American economy. And right now, Beijing is pulling the plug. Why? Because China knows something we don't. They're making a strategic move, one that could ignite a chain reaction, turning America's financial system into a ticking time bomb. Let's put this into perspective. In 2024, the U.S. national debt surpassed $33 trillion, an all-time high. Every single day, the U.S. borrows about $3 billion to stay afloat. But it's not just borrowing. It's a game of financial brinkmanship. Interest payments alone on that debt are now over $600 billion a year. It's unsustainable. And China knows it. For years, China has played the role of America's creditor, holding massive amounts of U.S. Treasury bonds. In return, China has been rewarded with interest payments. But now China is making a move. Why would China dump U.S. debt? It's not just about money. This is strategic warfare. By selling off U.S. debt, China could destabilize the global financial system, sending the value of the U.S. dollar into a freefall. Imagine this: a sudden surge of U.S. Treasuries flooding the market. Prices drop, yields soar, and interest rates skyrocket. The result? The American government would face an unprecedented crisis. The cost of borrowing would increase dramatically, forcing the U.S. to pay more just to keep the lights on. And that would be disastrous. It doesn't stop there. The global financial markets are intricately tied to U.S. debt. If China pulls out, other countries may follow. And just like that, the entire global financial system could collapse. It would create a domino effect. Stock markets crashing worldwide, currency wars erupting, and nations scrambling to protect their economies. And what happens when a global financial crisis hits? You guessed it, economic recession. Millions of jobs lost. Families struggling to survive. Let's talk about the U.S. dollar for a second. For decades, the dollar has been the world's reserve currency. But with China's move, the U.S. dollar could quickly lose its dominance. Other nations, especially China, could begin to de-dollarize their economies, shifting to alternative currencies like the Chinese yuan or even gold. This would send shockwaves throughout the global economy, leaving the U.S. vulnerable to inflation and financial collapse. But it's not just about the dollar. China knows that without the U.S. dollar's dominance, America's power on the world stage would weaken significantly. But what does this mean for you? For the everyday American family? When the U.S. dollar loses value, the cost of living goes up. Prices on basic goods, food, gas, housing skyrocket. And the value of your savings? Wiped out. Your retirement savings, your home equity, your investments, all of it could lose value in an instant. And when the cost of borrowing goes up, that means higher interest rates on everything. Mortgages, car loans, credit cards. The average American family would be squeezed, suffocating under the weight of their debt. But it's not just economic pain we need to worry about. What about the geopolitical consequences? If China pulls the financial trigger, other countries might take it as a signal to challenge the US. Nations like Russia and Iran would see this as a green light to act aggressively. Accelerating global instability. This isn't just about money. It's about China's long-term strategy to surpass the US as the world's leading power. By undermining the US economy, China is positioning itself as the central force in global geopolitics. They're using financial leverage to weaken America's ability to act. But China's strategy goes beyond money. It's also about military power and global influence. By destabilizing the US economy, China could set the stage for future military actions in places like Taiwan and beyond. Now the question is, what can America do to stop this? Is there any way to counter China's move? The answer isn't simple, but it starts with facing the reality. America must reduce its dependency on foreign debt. Start focusing on domestic production and strengthening its own financial system. But time is running out. China's move to dump US debt is not just a financial tactic. It's a direct attack on America's economic future. And unless America takes swift action, the consequences will be catastrophic. We're standing on the edge of a financial cliff, and if China has its way, we'll fall. The question is, will America act in time, or is it already too late? Stay informed, stay prepared, because what's happening today could change everything tomorrow. Subscribe, like, and turn on notifications. We'll be following this story closely. Don't miss out.